So what are the hottest loan programs of this year? In this video, I'm gonna break down the top 3 loan programs that borrowers are taking advantage of. Let's dive in.
Let's go! Snap your fingers, but do you still? You can do it all by yourself. Let me see you do it.
So in the world of loan programs, there's literally hundreds, thousands of options when it comes to different types of programs, different features, different down payment assistance, all sorts of different things that exist that can make finding the right program like looking for a needle in a haystack. Well, that's where the Mortgage Pro comes in. We look at your scenario, we look at the available options, and then we figure out what are the best options for you, give you the data so that you can make an educated decision and go from there. Well, this year, home buyers have been taking advantage of 3 programs mainly, and I'm gonna dive into each program and how you can take advantage of them yourself. So the first program that home buyers are taking advantage of are temporary buydowns. We're doing a ton of these. In fact, anywhere where a buyer can get a temporary buydown is pretty much a no-brainer. So what is a temporary buydown? Well, it's basically where the seller is prepaying part of your mortgage payment for the first 1, 2, or up to 3 years. So here's an example. In a 2-1 buydown, in the first year, let's say instead of a 6.99%, in year 1, your monthly payment will actually be based off of 4.99%. 2-1, they take the 2 off of the interest rate, like it's 2% lower, right? And like I said, the seller is paying the difference basically. So your payments based off of a lower interest rate for the first couple of years, the seller picks up the tab, and the best part about it is that this money gets deposited into an escrow account with your lender, and they draw on that account every single month when you make your payment. Well, what happens when rates drop? You're gonna wanna refinance. Well, the big difference between a temporary buydown and a permanent buydown is on the permanent buydown, once you spend that money is gone. So if rates drop and you haven't been in that loan long enough to get a return on your initial investment, you literally just wasted a bunch of money. Whereas with a temporary buydown, you're actually gonna get a refund for the unused buydown funds. So it's a no-brainer. If you can negotiate a temporary buydown, it's the way to go. If you need scenarios for the temporary buydown, you wanna see how much you would save, how much it would cost the seller, click the link below. We can easily put together an analysis for you so that you can make an educated decision, talk to your real estate agent, see what makes the most sense for you. All right, so let's switch gears to the second most popular program that we're getting a ton of requests for. We've been closing a lot of these transactions. It's the 1% down loan. Now, is it truly 1%? Because that's a very controversial topic when it comes to this program. And the answer is, well, it depends on what your purchase price is. If you're buying a $200,000 home, then sure. But if you're buying somewhere in a higher price market, like a lot of people are, it's not 1% down. It's really where you're getting free grant money of up to either $4,000 or $7,000 depending on the program that you're eligible for. But like I said, it's a grant program, which is a big difference from a down payment assistance program. Down payment assistance, you got to pay it back. Sometimes you even have a monthly payment. And when it comes time to refinance, you're going to have to pay that thing back, which means that it's going to eat into your available equity and maybe even make it to where you're not eligible to refinance. So you literally miss the boat when rates drop and you're stuck with the higher rate because you took a DPA loan instead of the grant money. The 1% down loan, depending on which lender, and we work with both lenders. New Way, we're a mortgage broker, so we got access to everything. But basically, depending on which program ultimately makes the most sense for you, you get either $4,000 or up to $7,000, and it's forgiven immediately. Dunzo. It doesn't exist anymore. Free money. And it's based off of the Fannie Mae Home Ready program. So you get the discounted rates and fees through that Fannie Mae program along with the free grant money. Duh, no brainer. So the last program that we're seeing buyers take advantage of this year more than anything else is putting less than 20% down. There is this huge myth that exists that you need 20% down to buy a house. That's a bunch of crap. That is not the way that it works. And there's more myths that private mortgage insurance is really, really expensive, which is why you need to save up that 20% down because it's just going to be unaffordable without it. Well, that's not the case. PMI is really cheap, especially if you've got good credit. Like on a $500,000 loan, for instance, if you put 5% down and you had a 780 FICO, your PMI is only $79 a month. It's a drop in the bucket compared to your taxes, insurance, and actual mortgage payment. So PMI is not a barrier to entry. It's not a roadblock. It's not a reason to not buy a house. And so what we're seeing is most people are putting 5% down, maybe 10% down, instead of waiting years and years and years to save up 20% down. Meanwhile, home prices continue to rise. So that same home that you could have bought for $750 now costs $850. So instead of waiting, buyers are jumping in now and taking advantage of programs that allow you to do less than 20% down. Now, like I said, we have access to all of these programs. So if you got questions about your own scenario, maybe you're wondering if the 1% down program makes most sense, or you want to know more about temporary buydowns, we'd love to provide those answers to you. Our contact's in the description below. Just click the link, reach out to us. We'll have a free, no hassle conversation, get all of your questions answered, and then you'll have the information you need to make an educated home buying decision. Now, if you haven't already, please do me a huge favor, smash that like button, make sure to subscribe to the channel, and I'll see you on the next video.
Right from the back, posted in the act. Got to hit the club, we've been mobbing all